Welcome back, everyone. We're diving deep again, powered by, you guessed it, AI. Today, we're taking a look at Cauldron Energy Limited, CXU, on the ASX. It's like having a superpowered research assistant sifting through all the data. But before we get started, remember, not financial advice, just a deep dive into what's publicly available on CXU.
Right. We're all about giving you the information so you can make your own informed decisions, not telling you what to do with your money.
Got it. Okay, so picture this. A company sitting on a potential uranium gold mine. Well, not gold, uranium, of course. Plus, they're exploring for those metals we need for electric vehicles. And do you get this? They're even in the sand business. Surprising, right? That's CXU in a nutshell. Our mission today is CXU the real deal, a hidden gem, or are we just playing in the sandbox? We're going to dig into their projects, financials, even what people are saying online to give you the full picture.
We're looking for those connections, those correlations. Does it all add up to a good story, or are there some warning signs?
Let's start with their big one, the Generative Uranium project. It's about 100 kilometers south of Onslow in Western Australia, and it's huge, over 11,150 square kilometers. For comparison, think Peninsula Energy, Aura Energy, Elevate Uranium, Deep Yellow. Their projects are tiny compared to this.
And within Generative, there's the Bennett Well uranium deposit. It has a resource of 38.9 million tons at 360 parts per million uranium oxide. So that's about 30.9 million pounds of uranium oxide. It's a lot, globally significant, actually. And what makes Bennett Well even better is that it's perfect for in situ leaching. That's the fastest growing uranium mining method because it's so efficient and cost effective.
Okay, big deposit, efficient way to get it out. Sounds great, right? There's a catch, a big one. Western Australia has a ban on uranium mining, a major roadblock for CXU.
Definitely a roadblock, but not necessarily a dead end. The big question is, could things change? The WA Liberal Party, they've always been pro-mining. If they get back in power, like they did in 2008, they might lift the ban.
So it's a waiting game. CXU's fate at Yanrei, hanging on politics. But even if the ban stays, there's all this talk about a uranium bull market on the horizon. Some CEOs are saying it'll be a massive return. They're pointing to rising demand for nuclear power and concerns about supply from Russia and Niger.
And they have a point. The uranium market is looking strong, the world wants clean energy, and nuclear power is becoming more and more attractive. On top of that, you've got these geopolitical events messing with supply chains, the perfect recipe for prices to go up.
Which makes things really interesting for CXU. Even with the ban, they're not just sitting there. They're expanding and upgrading their resource at Bennett Well. They've got a drilling program going on in 2024. It's like they're betting on the future. But the question is, what if the ban sticks around? What's their plan B?
Yeah, that's where we need to look at their strategy. They've mentioned exploring other ways to make money from Yanrei, maybe partnering up with companies in places where uranium mining is allowed, or even selling the whole project to someone who's ready to jump on this uranium boom.
So even with the ban looming, CXU's being proactive. They're not just waiting around hoping for the best.
And that's a good sign. It shows a management team that's adaptable and thinking strategically. They want to maximize value for their shareholders.
Makes sense. Okay, uranium. Check. Now, let's talk about CXU's other projects, starting with Melrose, the nickel-copper PGE project. It's in the West Yilgarn Craton of Western Australia, right near Chalice's Barabara project. The big deal here is that Melrose is the largest continuous landholding for nickel, copper, and PGEs in the area.
Yeah, and this is where it gets really exciting. Melrose is right next door to Chalice's Julimar project. That's where they found the massive Gonaville nickel-copper PGE deposit. People are wondering if Melrose could have a similar discovery, especially since CXU found elevated nickel and copper levels in their recent drilling.
So another potential Julimar. Now that would be game-changing.
The potential is there for sure. It's still early days, exploration-wise. But those initial results are encouraging. The question is, how does CXU's exploration budget and strategy at Melrose compare to what Chalice was doing at the same stage? Are they being aggressive enough?
Good point. It's not just about what's in the ground, it's about how you go after it. So we've got uranium, we've got nickel, copper, and PGEs. But guess what? CXU is also in the sand business. And not just any sand. This is high-quality stuff, strategically located at the mouths of some major rivers in Western Australia.
Sand might not sound exciting, but it's actually the most mined commodity in the world, more than coal, iron ore, even grain. The global market for sand is worth billions, and it's only going to get bigger. Construction, glassmaking, even solar panels, they all need sand.
Wow, sand is a hot commodity. Who knew?
Right. It's kind of a hidden giant, and CXU is in a good spot to take advantage of that. Their sand projects are right where they need to be, at the mouths of the Gascoyne, Ashburton, and Fitzroy rivers. That means access to high-quality sand that's in high demand around the world.
But there's a legal challenge with one of the sand projects, right? Something about a mining lease.
Yeah, there's a bit of a legal battle going on over mining lease 08487. It's at the mouth of the Ashburton River. Someone else is trying to stop the lease from being transferred to CXU, so that adds some uncertainty. The outcome could really change the value of their sand operations.
Another waiting game, but with a legal twist this time. Okay, so exciting projects, but what about the money?
As of September 30, 2024, CXU had $0.588 million in cash. Not a huge amount, especially for a company with big plans, but they have been raising money. They did placements, entitlement offers, and a rights issue, bringing in a total of $4.024 million. Plus, they've got about 250 million options out there. If those are exercised, that's another $4.521 million.
So they're not exactly rolling in it, but they are finding ways to fund their projects. What's the market saying about all this? What's happening with CXU's share price?
Well, it's been pretty volatile. CXU is a speculative company, so that's not surprising. But there have been some big jumps, especially when there's good news about their exploration or the uranium market.
A bit of a roller coaster ride, but with the potential for some big wins. What about on social media? Are people talking about CXU?
Oh, yeah, definitely. There's a buzz online, especially about Yanrei and Melrose. People are excited about the potential of those projects. And of course, everyone's talking about the uranium market and how CXU could benefit from higher prices.
Sounds like a lot of optimism. Any concerns out there?
The big ones are the uncertainty around the WA uranium ban and the legal challenge with the sand project. People are also a little worried about their cash balance and whether they'll need to raise more money.
So, excitement and caution. A pretty typical mix for a junior exploration company. We've got a good overview of CXU's projects, their financials, and even a feel for the market sentiment. But let's talk about the people in charge. Who's running the show at CXU?
You've got CEO Jonathan Fisher and Executive Director Michael Fry at the helm. Together, they've got a pretty impressive background in accounting, corporate advice, and mining.
That diverse experience sounds valuable, especially for a company navigating the mining world. What's their track record like? Have they had success in the past?
That's the key question. Their experience looks good on paper, but we need to dig deeper. Have they delivered results before? Have they created value for shareholders?
The experienced team, check. But we need to see if they can walk the walk.
Exactly. A good management team is important, but it's their track record that really matters.
Well, we've covered a lot in this first part of our CXU deep dive. Projects, financials, market sentiment, even the management team. But there are still some big questions we need to answer.
Right. In part 2, we're going to dig deeper into the uranium market. We'll look at the potential for nuclear power in Australia and how CXU plans to navigate the whole regulatory maze around uranium.
Sounds like things are about to get even more interesting. Stay tuned, everyone.
Welcome back to our deep dive into Cauldron Energy Limited. When we left off, we were wondering if CXU's management team could actually deliver on all their ambitious plans.
Yeah, that's a big question, right? And to figure that out, we need to understand the world CXU is playing in. So let's talk uranium. It's been making headlines with all this talk about a boom driven by clean energy demand and some geopolitical stuff.
Yeah, the global energy landscape is definitely shifting, and uranium is back in the game. Remember those CEOs predicting a massive return for uranium? Well, there are some solid market forces behind that.
Okay, help me understand. What's driving this uranium comeback?
Well, it's a few things coming together. First, you've got global electricity demand going way up. As economies grow, especially in developing countries, they need more and more energy. And at the same time, everyone's trying to cut carbon emissions, so countries are looking for clean and reliable energy sources.
And nuclear power, even though it's been controversial, is starting to look like a good option.
Yep. Exactly. It's low carbon, and it can provide baseload power, unlike solar and wind, which are intermittent. So more and more countries are either building new nuclear plants or expanding the ones they already have.
So more reactors mean more demand for uranium. Makes sense. What about supply, though? Can uranium production keep up with all this demand?
Well, that's the thing. Current uranium supply is lagging behind demand, and that gap is only going to get bigger.
Classic supply and demand. Scarcity equals higher prices. But you also mentioned geopolitics. How does that play into the uranium market?
Geopolitics is like throwing gasoline on the fire. The war in Ukraine has messed up global energy markets, including uranium.
Mm.
Russia's a big uranium producer. And with the sanctions and all the uncertainty, people are worried about shortages.
And then there's Niger, another big uranium supplier. It's been having its own political problems. That's got to add to the supply worries, right?
Definitely. Niger just shows how unpredictable things can be. Any disruption from these key players could send uranium prices skyrocketing.
So we've got high demand, limited supply, and geopolitical instability. Seems like a perfect storm for a uranium bull market. But let's bring it back to Australia, specifically Western Australia, where CXU's Yanri project is. Remember that ban on uranium mining we talked about?
Right, that's a big factor. The global market looks great, but CXU can't develop what could be a major mine.
It's like winning the lottery but not being able to claim the prize.
Exactly. And this is where the what-ifs come in. What if the WA Liberal Party wins and lifts the ban, like they did back in 2008? Suddenly, CXU is in a fantastic position to capitalize on the boom.
It's a gamble, but with a potentially huge payoff. What if the ban stays in place, though? Does CXU just miss out on this opportunity?
Not necessarily. Remember, CXU's been looking at other ways to make money from Yanre. They could partner with companies in places where uranium mining is allowed, or maybe even sell the project.
So they're not putting all their eggs in one basket. They're thinking ahead, looking for ways to create value no matter what happens with the ban.
That's right. And that's a good sign for investors. There's uncertainty with the ban, sure, but CXU is showing flexibility and a willingness to adapt.
Okay, so we've talked about the global uranium market and the situation in WA. But what about Australia's own position on nuclear power? We've got tons of uranium, but we don't use it ourselves. Could that change?
That's the big question, and it's definitely a hot topic in Australia. The cost of living is going up, and people are worried about energy security. So a lot of people are rethinking their views on nuclear power.
It's complicated, with strong opinions on both sides. Some people think nuclear is the only way to meet our energy needs without polluting too much. Others are worried about safety, waste disposal, and proliferation.
It's a tough balance. Public opinion is still divided, but the conversation is changing. What's for sure is that even if Australia doesn't build its own reactors, we'll still be a major uranium exporter.
So even if Australia doesn't go nuclear, CXU is in a good spot to benefit from this global shift with their big uranium resources.
Exactly. That's a big advantage they have. But it's not just about uranium, remember. CXU is also making moves with battery metals, with their Melrose project targeting nickel, copper, and PGEs.
And those are crucial for the whole energy transition, right? Especially for electric vehicles and renewable energy. And remember that comparison we made to Chalice's Julimar discovery. The possibility of CXU finding something similar at Melrose is really generating some buzz.
Absolutely. And in the next part of our deep dive, we'll take a closer look at that potential. We'll examine CXU's exploration strategy at Melrose, see how it compares to Chalice's approach at Julimar, and assess the chances of CXU hitting it big.
And we're back for the final leg of our CXU deep dive. We've talked uranium, we've looked at the big picture, and now it's time to dig into those battery metals.
Yeah, it's like we're on a treasure hunt for nickel, copper, and PGEs. Will CXU strike it rich at Melrose? That's the question.
Exactly. And remember how we talked about Chalice's Julimar discovery? People are really excited about CXU potentially finding a similar treasure trove of battery metals.
I get it. That Julimar discovery was huge. Chalice's share price went through the roof. If CXU can pull off something like that at Melrose, investors could be looking at some serious gains.
Okay, so let's break this down. Why are nickel, copper, and PGEs so important for this whole energy transition thing?
Well, think about it. Electric vehicles, solar panels, wind turbines, all that stuff, they need these metals to work.
So as the world goes electric and switches to renewables, the demand for these metals is going to explode. CXU's in the right place at the right time, right?
Absolutely. That's what makes the Melrose project so interesting. It's in the West Yilgarn Craton in Western Australia, a region that's already proven itself when it comes to nickel, copper, and PGEs. Just look at Julimar.
But potential's one thing. What has CXU actually found at Melrose so far?
Their early exploration is showing some promising signs. Remember those elevated nickel and copper levels they found? That could be a hint that there's something bigger down there.
Like finding a few gold nuggets, suggesting a whole vein might be nearby. But we need more than just hints. What's CXU's game plan for exploration at Melrose? Are they really going for it?
That's what investors need to figure out. We need to compare CXU's approach to what Chalice did at Julimar. Are they spending enough on exploration? Using the right techniques? Moving quickly enough? That'll tell us how serious they are about making a big discovery.
So being in the right place isn't enough. You got to have the right strategy and really commit to it. But let's be real, exploration is risky. There's no guarantee they'll find anything, even at a place like Melrose.
True, exploration is a gamble, but that's part of the excitement. The possibility of finding a world-class deposit, that's what keeps these companies going.
It's that thrill of the unknown. A discovery could change everything for the company and bring investors huge returns.
Exactly. But that means investors need to carefully weigh the risks and rewards with companies like CXU. How much upside is there? How risky is it?
So we've looked at CXU's projects, their financials, the uranium battery metals markets, and even their management team. We've covered a lot. But what's the bottom line? Is CXU a good investment?
That's the million-dollar question, and it's never easy to answer. CXU's got potential, but also risks. They're involved with commodities that are crucial for the energy transition, they have a good mix of projects, and their management team has the right kind of experience.
But they've got challenges too. That WA uranium ban is still up in the air. They've got legal issues with their sand project, and exploration is always risky.
It comes down to balancing the potential rewards with the risks. For investors who are okay with some risk and who believe in the long-term story of the energy transition, CXU could be a good option.
But remember, this is a speculative investment. There are no guarantees. It's for investors who are comfortable with ups and downs and who understand that the journey can be as wild as the potential payoff.
It's an adventure with the chance to strike gold, but you gotta be prepared for a bumpy ride.
And that wraps up our deep dive into Cauldron Energy Limited. We've given you the information. Now it's up to you to decide if this is an adventure you want to take.
Remember, knowledge is power. The more you know, the better your decisions will be.